Welcome to Analyzing Finance with Nick. In this video, we are going to be debunking the doomer on the housing market, particularly about housing costs and how housing is going to perpetually stay unaffordable. The thing is, a lot of these debunking the doomers that we've gone over, and it's going to be more true with this real estate one and the manosphere doomers, is that they have enough kernel of truth to be convincing to the general public who is not well informed or these matters, or just simply doesn't deep dive to do the research to see the actual facts on it. And the housing market is a good example of this, because the answer of whether the doomers are right is not if they are right, it is when they are right. Because in the short term, the doomers have and will continue to be right on housing. However, if you extend your time frame by not too far out into the future, the doomer thesis on housing rapidly collapses. And the first part of this we're going to talk about, which really kind of debunks the doomers on housing and more just creates a different doomer narrative that I talk about in my compensation theory video I did several years ago on this. It's not really the fact that housing has necessarily gotten a lot more expensive, at least in real terms. It's that people are poorer. That's why I titled this video like, housing is not unaffordable, you're just poor. And I'm going to show why that is the case to start. But first, let's just do the supply and demand fundamentals here. The way to measure the level of housing supply is residential units per capita. And in terms of the residential units per capita, they've gone up 1.3% since 1990. And I use 1990 because that was kind of an era where housing was generally considered affordable nationwide relative to incomes. Like, housing really started its kind of rise into the unaffordability territory in the 2000s, and the valuations were pretty stable prior to that. So that's why I'm using 1990 as my start date. In 1990, there were 0.88 residential units per capita versus 2022, there are 0.9 residential units per capita. And so this number has grown, even with population growing 27% in the United States over the same period of time. And a lot of that growth has mainly been in the construction of apartments. In fact, if you look at apartment construction, we have record levels of apartment construction in the United States. We're breaking highs last seen in 1971 in terms of new apartments coming online in 2023. And certain cities such as Atlanta and Dallas and Phoenix are seeing their entire apartment supply go up double-digit percents or more. So there's a lot of apartment supply coming on. So where's the crunch? Well, the one thing is that the measure is single-family homes. You're seeing a lot of people in the millennial age group are finally starting to have kids, and they want to live in a more suburban lifestyle, and the pandemic kind of pressured that even more because cities have become less safe in large parts of America, and also if you're working at home, you need a little bit more space than an apartment for like a home office or something like that. And so now you're seeing a giant spike in single-family home demand. And when it comes to single-family homes, the supply demand dynamic is a little bit different. And the way you would measure this is you look at the single-family home ratio, not compared to the per capita, because somebody who's a single person who lives by themselves or like a couple with no kids is probably satisfied with an apartment. So what I do as a metric is, what is the ratio of single-family homes per household of 3+ people, whether that's a family with kids or multiple roommates or a multi-generational situation, just like where you need more space than just a 2-bedroom apartment is what I'm going to use for this metric. And this is a much different story. The number of single-family homes per households of 3+ people has decreased by 12% since 1990. In 1990, there were 1.2 single-family homes per household of 3+ people. In 2022, there are only 1.08 single-family homes per household of 3+ people. There's a number of reasons for this, like you have changing demographics and immigration, which has put stress on population densities, particularly in major metropolitan areas. Urbanization, this means that housing closer to job centers becomes a lot more expensive, so therefore it makes more sense for developers to build apartments than single family homes because there's more profit margins in those. And also building a single family home on a plot of land that could generate a lot more cash flow than an apartment, the house would have to sell for a lot more money to justify it, at a price that's often the case unaffordable for a newly formed family. And so yeah, that's kind of what is going on here. You have not necessarily a shortage in places to live broadly, but you have a shortage of places to live at this stage of time that people want that type of housing. So single family homes for young families in this example. And there's also a shortage that is possibly created because baby boomers are not downsizing to the same degree as anticipated. Either they want to stay in the same hometown that their children live in, or if they want to downsize to a house that that's big enough to still have their grandkids over. So maybe from a 5-bedroom house to a 3, but not downsizing to like a townhome or an apartment that many anticipated. And so as a result, a lot of these houses that were previously occupied by families a generation later are now occupied by empty nesters, and that restricts the supply of houses available for new families. So this is where the real crunch is on the housing side. But even with that decline in housing supply for single family homes, what is the actual level of affordability? And also, let's see how it compares to other countries. Like, when you look at the two statistics I just cited, which was the statistic on housing units per capita overall and single family homes with 3+ people, it's very similar. In OECD countries, it's overall the residential units per capita is up about a little bit less than 2.5% since 1990. So it's more than the U.S. actually, even though a lot of these countries like in Europe and Canada and Australia actually have much higher housing prices than America does, and had much higher acceleration of housing prices. But supply is still there. The change in single family homes to households of 3+ people is also similar. It's down, but from 1.16 to 1.08. So it's the single family home supply is not contracted as much in other OECD nations. Also, I think because apartment living is more culturally acceptable in a lot of these places, and they don't have the space for single family homes anyway. It may have something to do with it, but the difference is negligible either way. So this isn't just a U.S. phenomenon. This is across the entire developed world phenomenon. But the last thing I'd really like to point out really is what house prices are trading at relative to gold. And I use gold here because, one, gold is historically a preservation of purchasing power. Like 1 ounce of gold today still buys a nice suit, and it bought a nice suit back in 1865. And so also gold is also negatively correlated with real interest rates. So, and same with housing is too. So when real rates go down, housing prices go up because investors require lower cap rates on rentals, and also lower mortgage rates make houses that were previously unaffordable more affordable to the end buyer. And gold is the same because gold has an effective real interest rate of 0. So when real rates fall, gold becomes more attractive. And so therefore they both kind of are correlated in that sense. So, and if you look at housing prices, both in the United States and the United Kingdom since 1960, it's basically flat. Since 1952 to 2023, UK housing prices in terms of ounces of gold are the same level, even though in nominal terms they've gone up exponentially. I think that's, and then when it comes to U.S. home prices, we look at the Case-Shiller index since where we have it since 1975, and in gold ounces, the Case-Shiller index is basically the same as it was in 1975. The recent echo boom in housing post 2008 was really more just a product of inflation and falling real rates causing disproportionate levels of inflation in housing compared to other sectors of the economy than it is in terms of an actual other speculative bubble. And I got this one wrong, honestly, when I was analyzing this in the 2010s. But looking back at it, that's pretty much what happened. And what is this telling you? It's that housing is really not that much more expensive in terms of real purchasing power. What has gone down is wages and earnings for individuals. So housing is a lot more expensive relative to incomes. And in terms of rent-to-income ratios have gone up a lot in most metropolitan areas as well. And that's just simply because people's incomes are not keeping up. So, as I said, housing hasn't really gotten more expensive. You've just had inflation and people are getting poorer as a result of it. Let me know what your thoughts is, and I'm going to go with part 2, where I'm going to have the more optimistic side of debunking the doomer for housing, is why I think this equilibrium that we have now is not going to sustain, and I think we could see real declines in housing at a rapid pace pretty soon. Thanks for watching.